Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. We are doing the Three Amigos a couple of days early because somebody is retired and they're enjoying life, and he's just screwing with our Thursday. So now we're going to do it on Tuesday, and it's all kinds of craziness because the guy got retired. I'm telling you, this is fun. How you doing, Dion?
Howdy, I'm doing great. Thanks for doing this early. I appreciate it because you've said it a few times. When you retire, you start to wonder how you had time to work.
Exactly. Exactly. Hey, Matt, how are you?
I'm having a lot of trouble keeping up with Dion's retiree schedule.
I just saw your title, still not retired. You guys, these little subtle things you work in, you guys are so crafty. I love it. Well, hey, I know you guys didn't have time to watch it, but I did a live stream this morning at 7 a.m. kind of off the cuff. And I'm going to highlight it here because I think July 20th, that National Association of Realtors Day is coming up. I think we're getting little tidbits of information, both about existing homes and new homes. And I want to show you a Twitter, a user with his list of builder feedback about different cities, because I think there's a lot in there, and it really points to housing potentially causing the next recession, or the recession that starts here soon. So you guys ready?
Ready.
Awesome. So again, as I said this morning, full credit to the author, Rick Palacios. It's actually one of the reasons I wanted to do this way so we could give him credit. This is a thread. I'll go through the top one and then we'll go city by city. Again, he works for John Burns Real Estate Consulting. John Burns is the place to go. It's either them or Black Knight if you want real estate information. They have been doing a home builder survey for years.
Yeah.
And you could actually go back in Rick's feed and look at last month and the month before. This is for June. So again, lots of contracts being canceled. Talked about that. Prices being cut. Greg Dickerson told us that was coming. Demand is finally cooling construction costs. That's an aha moment. We haven't talked about that. Matt, you've actually said you've got a bunch of projects you're waiting to keep people busy. And then look at this, builder layoffs. I did not think we would see this so fast. They're laying off people. That's pretty eye-opening. What do we think of that headline? We'll go to you first, Dion, and then we'll get to the cities next.
I would want to know the percentage of real estate transactions that were happening that were builds versus new builds, because there's people like you know, a 2-year ADU, which sounds like a lot of fun.
Oh,
where when builds stop happening because buyers disappear, buyers cancel deals. I'm curious to see how many get laid off and how many transition into projects like Matt has, projects like I have waiting.
Yeah, no, exactly. And Matt, anything in this kind of surprise you?
So I think I heard a number. It was 60,000 cancellations.
Yeah, so that's on existing home sales. You're absolutely right. 14.9% of June contracts were canceled, roughly 60,000, just before anybody blows up and, goes all Nick on me.
Percentage.
Yeah. Well, it's interesting. 14.9,
20%, right?
Yeah.
It's like 20% of a month.
Yeah. But let's not get it twisted. We had a year ago, we had 11% of units be canceled. So it's up 3%. So it's not like it went from 0 to 14.9%. So again, let's not forget that. But let's go to the cities, because I think it is very interesting, because we got cities from across the country.
Yeah. Atlanta.
Someone turned out the lights in on our sales in June. This actually is what I think they're going to say about existing home sales in June. This is exactly the kind of headline I think is coming. Right. Then we got Austin. How many people keep telling you Austin's on fire? Sales have fallen off a cliff. We're selling 1/3 of what we sold in March and April. Trades are willing to negotiate prices since markets have adjusted significantly in the past 60 days. Birmingham, that's the South. Talk about hot of hot. Sales have fallen 75% the last 2 months, and further out communities. Again, we're like, if you're close, it's okay. But farther out you are, they're going out. We'll do Boise and then I'll get some feedback. Boise, right? The market that I've highlighted for months is kind of the bubble of all bubbles. Sales have slowed tremendously. Builders are dropping prices and halting new starts. Seeing price drops on labor due to slowing of starts, expecting 15 to 20% reduction in most costs. Talk about that. This is Kathy Wood deflation right here.
Yeah.
So what do you guys think of what's happened thus far in this list? Anything?
I love it.
Yeah.
I love it. I love I was right and I love it. And
I was right and I love it.
I have $500,000 worth of projects that it's going to cost me same dollars. It's going to cost me $350 to do them.
Yeah.
Like, so now I'll just do more. I'll still do $500,000 worth of projects and it'll be $700,000 worth of value that I'll get. That's the first thing. Second thing is, in the interview that I did with the uneducated economist, we talked about this.
Mm-hmm.
He talked about the fact that even right now, plywood was going for $84 a sheet, literally just a few months ago, and they just marked their stuff down to like $46 a sheet.
Wow.
So it's, that's plywood's off about 50%. 2x4 studs, they're still coming off. The only downside to what that he's seeing in that market, the only downside that uneducated economists is seeing is that they're going to start making loads smaller, which is very frightening, because then that allows, you're not going to buy a train car load of lumber to speculate. You will buy a truckload worth of lumber to speculate. And so they're actually taking what used to be a car on a train, and they're basically breaking it into fours. And now they're selling off those quote unquote futures, which when you make it smaller, like it's what every stock company does, right? You don't want a $2,000 stock. You don't want a $2 stock. You want a $200 stock. So it fits a bunch of investment portfolios. So I think we're seeing exactly what we all kind of expected we were going to see. And yeah, there's going to be pain. And I think good.
Is it a little faster than you thought?
No, this is
Okay.
why I mean, I really truly expected when rates got into the sixes, which they did, I fully expected that to cause the massive slowdown, not the fives, but the sixes.
Right.
When they got into the sixes, and that's where they were. That's what caused all this pukey.
Yeah.
Like we're going to see things pick up in Q3 because we're back down in the fives. We're, 5.25, 5.5. You can find those rates now.
Yeah. Yeah. Dion, any thoughts on what we've gone through Boise?
Yeah, I have two things. The first one is, it didn't happen as fast as I was thinking it would.
Okay.
Because what I predicted last year, and we have this bet going, is that they would raise rates. It would cause things like this, especially in new builds.
Yeah.
Because and so the second thing I want to cover is the people watching our content who are doing one rental at a time, who are investing to make work optional.
Yep.
Are they buying new builds?
No.
Right. So this isn't impacting the people who are watching this video who are thinking, oh, this is doom and gloom. There's a recession coming because the new home buyers are falling off a cliff. Unless you're a builder watching this who also buys one rental at a time, you're really not impacted.
Right.
But I thought we would increase rates faster. Transactions would fall off a cliff. Inflation will continue.
Yeah.
That's the problem. Is it wasn't free. It wasn't low interest rates causing inflation. It was helicopter money. What do you call them? Stimulus ballers.
Yeah.
All of the
stimulus ballers.
People with money to spend that they didn't really have to work for. And so maybe I got the timing wrong, but I think then we'll see rates drop. And how Matt just said, rates went back down to the fives. That's because lenders lend on margin.
Correct.
The Fed said we're going to raise rates, so banks jacked rates up. Then the Fed raised rates a little and they jacked rates up again. But then lenders are competing with each other. So they have that margin that they can squeeze and compress. And as the Fed was still holding assets in their balance sheet, there wasn't as much risk for lenders. That's what's going to shift going forward. Now that we're into quantitative tightening, the Fed is going to be offloading assets from their balance sheet, which is going to put more risk on the lenders. I think we'll see rates go up again, even if the Fed doesn't do a 0.75 in this next meeting. I think we're going to see rates go back up. So if somebody's looking to lock one in now, I would think this is the week to do it.
Yeah, if you like it, lock it for sure. Something Matt, the mortgage guy, brings us every Wednesday. A couple of things I want, because we got more to go through that really start painting an interesting picture that we've all been talking about. Builders are going to be an interesting stock or company to watch, the public ones, because what have we seen so far? Right, we've seen potentially layoffs, which is it's cost reduction, overhead. You've also heard now multiple times that subs are cutting costs, and we will hear about lumber, a big input going down. So yes, they may be lowering a price 5%, but if their costs are down, as Boise said, 20%, people are going to be really pissed off when builders' margins go up.
Yeah.
Right? They're going to sell less and make more money. It's going to drive people crazy. So let's keep going, because there's more in here that just kind of shake me. This is one that hurts. Charlotte. This recession is looking like and feeling like a big, long 5-year depression.
That's a new builder.
Yeah, they didn't.
That's a guy who started his company in 2012 or 2014.
Yeah, after the last one.
Yeah.
No, nothing like that. It's I don't see a 5-year depression.
No, come on.
No, it might be 5 quarters. I don't know if it'll be.
Yeah, I think 5 quarters is reasonable. I think so.
Yeah.
I was actually looking for a stat that I saw yesterday. I can't find it, but it was a great chart. And the chart showed that basically in the last decade that we've built 5.8 million new homes from 2010 to the end of 2019.
Mm-hmm.
Do you know the last time that we built 5.8 million homes?
No.
1930 to 1939.
Oh, wow. Wow.
Since then, we have averaged 21 million homes a year.
Interesting.
At 21, there you go. You're the man. That's it right there.
If you can send that to me, I will put that as the thumbnail.
Yeah.
I will. Yeah. The red line is the last 10 years. The blue lines are each decade before that.
Oh, wow.
So if everybody wants to pontificate about how horrible the market is, it's supply and demand.
There you go. There you go. I love this. So let's keep going. Colorado Springs. Amazing how fast the market could change with such a rapid increase in rates. So many people were taken out of the market. Most builders will go to suppliers trades and ask for rollbacks on cost. Again, this is why July 20th is a big day. New home sales are roughly 10% of the market. I expect June home sales existing to be problematic.
Yeah, for sure.
Dallas, everybody likes Texas. Framing labor has become readily available, suggesting housing starts slow down in the finally showing up in the typical signs. Haven't raised prices in 3 months. Framing labor is readily available. What that tells me is they are slowing down.
Yeah, for sure.
Managing cash flow.
Yep.
Des Moines, starting to see construction trades hold labor prices for us that are fearful of a downturn. Again, input costs are going down.
Yep.
Fort Myers, how about this one? Investor sales have stalled. Apparently, a lot of investors, my fear here, these are Airbnb buyers. Let me go buy a Florida home as an Airbnb. I don't know. I don't know that for sure. Just crazy. But even investor sales have stalled.
Yep.
Right? Doesn't make sense. Doesn't make sense. Grand Rapids, believe we're on the edge of cost reductions, making every effort to refuse further cost increases and pushing to decrease all areas have significant 2-year run up. Again, costs. Traffic slowed from red hot, feels different for sure, but is a normal market. This is an example of a market that's probably doing okay. Here, I want to get to one that I saw before and we'll wrap it up. Let's see. Again, folks, follow Rick on Twitter. He's an awesome read. I want to find the one that
if you're a framer in New Hampshire and you want to work for a reasonable wage, lumberjacklandlord@gmail.com.
Yeah. So we'll do 2 more. Nashville is the one I was looking for, because this is what I pointed at months ago. Scary times, hoard cash and hang on for the ride. National builders are cutting staff and offering buyer incentives. Move up buyers are now practically non-existent.
Yes.
This is the Fed breaking housing. This is 2 years of people with rates below 3s going, I'm not selling, I'm staying put. Right, Dale?
Well, what I think is funny is they say the Fed has these tools to slow inflation. So they use the tools and then we stop transactions, which you would think in normal years would slow inflation.
Yeah, well, it's not only going to slow inflation. A lot of these builders are talking about lower costs, which is inflationary or deflationary. But really what I see in all of this is transactions crashing.
Huge.
And still very few people are talking about transaction crashing, transactions leading to probably 4% loss of GDP, and housing being the blame for the recession. This is all the stuff that I see coming in real time. Yeah.
I love it.
Yeah. So again, that's new construction. Do me a favor, follow Rick. This comes out monthly. I've talked about him a couple of times. I've interviewed him a couple of times, luckily enough. Matt, where can people find you? Still not retired?
Lumberjack Landlord, Instagram, YouTube, and my live stream on Sundays, 11:30 a.m. Eastern time currently.
Awesome. And Dion, how about you?
Actually, I don't know where people are going to find me. I'm going to be in a different place for every video, I think.
Ah, that's awesome. You're doing retirement right.
That's awesome.
Awesome. Thanks, guys.
Ciao.